US stocks have gained ground again this week with more record highs, and the US dollar is a little flat after a busy week for central banks, which saw the Federal Reserve cut rates. So what next? To talk us through what to watch next week, I'm joined by Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me back.
So stocks have continued to push higher, a third straight week of gains, still defying seasonality. So what are the general market conditions that we should be expecting to deal with next week?
So the seasonality consideration, it's both a surprise and a non-surprise. It's a surprise because typically we would expect volume and volatility to pick up during this time of the year, and it is. But the directionality is not always the certainty in this. There's a wide dispersion of that average. So when you have the underlying considerations to keep a risk-on mentality, it will stay, and I think that's kind of what we have right now. But the thing that I really take away from, especially this past week, and it's something we've talked about for a number of weeks now, is there's really not a strong fundamental backing and conviction behind this charge higher. So we keep, and I say charge, it's really a march or a slow crawl higher. It just keeps going consistently, persistently, and we justify that rise after the fact. They're not really putting it on the basis of a really strong and encouraging outlook for growth. It's not really an earnings-based forecast in the reference of the S&P 500 or equities, as that's usually how I measure my benchmark for risk trends. It's really just that is the area to be in, to be risk exposed and be participant. There's the FOMO element of it, and even though it's at record highs and it's very expensive to get into the market now or add marginally into exposure now, it still is the more appealing approach, and hedges or the threat of risk aversion just isn't potent enough to arrest that climb. Eventually, that you hit a tipping point, but we haven't hit that tipping point. So as we do this, I think some of the top markets to watch definitely have to watch U.S. equities in particular, equities in general, but U.S. equities in particular. I'm watching the Nasdaq 100 into next week, just because it is I think, the most tangible of the disembodied risk-on themes, and that's the AI consideration. It's really tech-heavy index. The dollar, which, as you mentioned, it would just wobbled, didn't necessarily do what one would expect with the Fed rate cut if you just look at it on face value. But it is definitely at the foundation of some deeper concerns. And then gold, as a anti-fiat, anti-dollar consideration, its record high also stands out as historically we look at gold as a safe haven. It clearly isn't playing a safe haven role, playing a very different role than it has in the past. So those three markets are really going to be what I'm watching into next week.
And what about themes? Let's think about themes here. Potent themes which could upend the calm that we're seeing.
So the themes are, I think it's just a search for what is driving or leading our speculative consistency. I'll be charitable with it. Consistency. There's not really a whole lot of conviction, but you need something to say, if prompted or pressured, I may stick it out a little bit if there's a little wobble or pullback. And I think it just keeps coming up as a mention, maybe just because it's popular in financial media. It's a big search term. But it seems to be anchored, especially into the concentration of these large market cap stocks and the ones that are benefiting from it. So the spillover of NVIDIA into some of these other companies that it's powering its AI build up. So it's one of those themes, and people get mad at me because I kind of liken it to the crypto swell or the meme stock swell, but it really is heavily speculatively oriented. And I think that's one of the top themes we just need to be mindful of. And remember, it's a sentiment-based thing. It's not necessarily as much about the fundamentals of the AI expansion and adoption for the economy. Beyond that, I mean, the growing deficits and debt globally. I mean, in particular, it's also in the U.S. That is getting a little bit more traction, seeing some really provocative reports in financial circles, but it's becoming more and more center of conversations when you have the potential of a U.S. government shutdown again. But you also have massive forecasts for growing debts and little interest in trying to pull back the debt sales and particularly on sovereign levels. And I'll just keep watching the politics in the U.S. and particularly in the U.S. markets. It's very concentrated.
And then as far as what could be the catalysts for those themes, what are we watching for top event risks next week?
So the event docket is actually quite light. There are a few things that I would say stand out, and they could tap into some more underlying currents of fundamental themes, but I wouldn't put too much expectation on any of them necessarily. But Monday, I would say the Chicago Fed's National Activity Index for the United States. We always want to see how it's doing. This is a forward-looking reading, not really a market mover in the short-term trading community, but it is very indicative. On Tuesday, we probably get one of our more thematic growth considerations, and that is the September PMIs, the advanced readings. So we get them from countries like the US, the EU, the UK, Japan, and those are numbers you definitely want to look at because we always have to take it back to growth. Even if it's not the driving factor and we're maybe outright ignoring it as a theme, it eventually will pull us in whatever direction it's going. If it's a slowdown, eventually it's going to hit the markets. If it's a pickup and acceleration, eventually will lift markets. That's just the core of our fundamentals in our markets. And I'll also watch on Tuesday the U.S. money supply because of the debt considerations. On Wednesday, we have some uh, German IFO business confidence. We have Canadian manufacturing sales, U.S. new home sales, but I don't think any of those really tap into a deeper vein. Thursday, last of the major central banks, the Swiss National Bank is expected to cut rates by 25 basis points, even though the ECB didn't. So that should be interesting in the Swiss franc world. U.S. also has durable goods and U.S. trade, important short-term data too. But Friday is really going to be the top event risk throughout the week, and that's going to be the U.S. PCE deflator. It will keep on that ongoing conversation about is the Fed doing the right thing, which is more of a concern from the White House, and what the pressure is going to be and what they're allowing to happen. Because they certainly this past week were not that keen on getting aggressive with easing. But if inflation pressures pull back, that will allow them to really step on the pedal, especially if we get into our next non-farm payrolls and it turns negative. So PCE deflator, the Fed's favorite inflation indicator, is probably going to be the top release through the week. Comes on Friday, so it's another wait and see week for event risk.
Well, thank you very much for your insights once again, John.
Thank you.
For more videos like this, please do like and subscribe.